When we went through the pandemic, everybody was like, this is an amazing time. And I'm like, going, okay, we're going to take existing home sales from 85% of the market down to like 40 to 45. Well, I was wrong. We took it to 35 because we wrote all these loans with really low interest rates. And I call it the abusive relationship. I have people that I put into houses. Now they have 4 kids and they're in a 2-bedroom and they're like, finally, okay, we have to move out of this. We don't have a choice. And that's what you run into. And I've never seen in my history of being in this industry, rates go up 5% that fast in a 6-month period. Normally we see 1.5% to 2% over, fluctuation in the rate, and it doesn't affect purchases. 26% of all people have a mortgage of 6%, and 20% have a mortgage in the 3% or lower now. So that's changing. Not everybody's keeping that rate anymore because they understand life has changed. You have to do more. You have to move on. And that's what you run into.
Well, I think that's probably just people that have to do life. They, like you just said, something changes in their life.
Alrighty. Hey, everybody. Welcome to Home Guys podcast again, Home Guys Nation. And Ed, how do you say your last name? Ed?
Parcaut.
Parcaut. Okay. Today we are here with Ed Parcaut. He's the founder and CEO of Lending for Living, a Navy veteran, a talk show radio host, a 2-time podcast host, and one of the most respected names in the mortgage industry. He's got advanced degrees in marketing and international business. But what really sets Ed apart is what he learned serving as a hospital corpsman in the United States Navy. How to show up for people when the stakes are high and the process feels overwhelming. You've got nearly 30 years in mortgage.
Yep, 20. Ed? Yeah, that don't remind me. I started when I was like 12, but
Right. Well, right out of the gates, let's thank you for your service, because that's one of the things that we do all the time. We see anybody with a Vietnam hat on, we always say, welcome home, soldier. Can't even
welcome
speak.
Home. My dad always says, give a welcome home.
So that's that means a lot to us. So appreciate that. I didn't really finish, but I was telling you, I have about 3 years overseas. I was one of those guys that went over as a civilian contractor.
Okay.
And I was a firefighter over there. And so stuff would fly over the fence and then we would put it out. Right. So that was my job.
Yeah, I was fortunate enough not to go into combat. And I say that because anybody who goes in combat, yes, I do a podcast called Helping the Brave, and I interview so many people. And the stories I hear from the last war, why we were in it for so long, was for a lot of the officers to get their next advancement because it looks so much better on their career if they got their 2-star during a wartime than the other time, and that's why anything left on.
Yeah, while they're in country, they get. Yeah. I got some stories for you over there too. If you ever want another interviewer, just for that, I got some crazy stories that I probably need to talk about a little bit more. I'm getting better at talking about. But yeah, it was a little different over there.
Well, the problem, what I'm just getting at is people wonder why, we're in wars for so long. It's all profitability. I'm in California. It's like the homeless. They get all this money for the homeless, and then our population for homeless doubles. And the reason is because there's money to be made with them. They never want them to go away. They want more of them so they can have that money for other things. And that's just where we live now. And so what do? We just build houses, do what we do in the mortgage industry, and you do what you do in the real estate industry. Even though that stuff is going on, you just have to focus on what you do and what's best for your family and move on.
Yeah, absolutely. Right. So Ed, take us back to the beginning. How did you get into the mortgage industry? How did, I guess being in the Navy kind of put you down that path, or how did you?
No, I was a hospital. I joined the Navy to get in the medical field. After a few years of that and some stuff that I've seen, I ran away from the medical industry, which I didn't understand at the time. Till we won't get into all that other stuff. That's a totally different toy. And then I realized, so I ended up getting my bachelor's and master's, and then I got in the real estate industry, and then got out of the real estate industry because when I got into it was in the 92, which was a bad time, and then 93, and then 94 was even worse. Hold on a second here. I think I got somebody outside making noise. If you can hear it, I don't know if you can hear that, but it's trash day. Yeah.
Trash. Where, you know what, we just do life. Like whatever happens, and we just kind of
Well, normally I don't have our window open in my studio, but it was nice and cool out today. It was 46. I'm like, I need some cold air in here.
See, that's a heat wave for us here in Minnesota. We're like, woohoo, shorts and t-shirts at 46.
Yeah. And all right. So then, I fell into the mortgage industry. First, I started in the military exchange system, selling computers through the military exchange system. When back then, when you couldn't customize computers, a long time ago, and then that whole thing fell apart. And my neighbor owned a mortgage company, and he's like, "Why don't you come see if you like it?" And actually enjoyed numbers. I didn't realize that I enjoyed it that much. That I was helping people get into homes that changed the trajectory of their family and their life, owning a home. And this was in San Diego. And so I really enjoyed it. And so I stayed in the industry for as long as I've done it. Because if you look back over the last 25, 27 years, truly there's only about, I don't know, 15 years of really good time. The rest of it, there's something that's happened. We had 2008. We had the great inflation thanks to Biden. And then if you go back further than that, we had the S&L crisis. And then we had in 91, 92, there was that crisis, so there was a lot of crises during that period of time that also made a lot of opportunities to buy real estate and do other things at the same time. But the actual mortgage industry, because if you look at rates and where they were at, there's only a handful of times they were really good.
I didn't even, you just made me all of a sudden think that you're right. There's only some really, really good times where you're just, writing mortgages left and right, and then the other times is you're scrapping,
right?
Because everything's not moving.
Right. When we went through the pandemic, everybody was like, "This is an amazing time," and I'm like, "Okay, we're going to take existing home sales from 85% of the market down to like 40 to 45." Well, I was wrong. We took it to 35 because we wrote all these loans with really low interest rates. And I call it the abusive relationship. It's so comfortable, no matter how hard it is for you to stay in it, you're staying into it. Like I have people that I put into houses. Now they have 4 kids and they're in a 2-bedroom and they're like, finally, okay, we have to move out of this. We don't have a choice. And that's what you run into. Luckily right now, luckily or not luckily, 26% of all people have a mortgage of 6%, and 20% have a mortgage in the 3% or lower now. So that's changing. Not everybody's keeping that rate anymore because they understand life has changed. You have to do more. You have to move on. And that's what you run into.
Well, I think that's probably just people that have to do life. They, like you just said, something changes in their life. They have to move. You're not getting the ones where during COVID, I called it COVID window, right? People got tired of looking out the same window that they've been looking out because they said stay home. Well, wait a minute, my house is going up. I have all this extra money that I didn't spend on vacation, didn't spend on extra gifts. I want to move,
Right.
And so I called it COVID window. They just got tired of looking out of one window. They want to go look out another window.
And for us, like a lot of people move from the Bay Area. I'm close to the Bay in California, Northern California, and they move to outer areas away from people. Well, it's always a 3-year window where they do that, and then 3 years later they don't want to commute anymore, or they had to go back to work and now they have to sell that. And it's always pretty much a 3-year window when that thing's so if you whatever's happening now, 3 years from now it's going to change. 3 years from now it's going to change. The only thing that was different is we saw rates go up 5% over the last whenever, and please, I'm not trying to get political, but when Biden came in and shut down that pipeline, I knew there was going to be inflation, but most people had no idea what inflation was. If you weren't 55 or older, you had no idea what inflation could do to stuff. And that's why people didn't understand what was going on. And I've never seen in my history of being in this industry, rates go up 5% that fast in a 6-month period. Normally we see 1.5% to 2% over, fluctuation in the rate, and it doesn't affect purchases. It affects refinances, but people still purchase. After that, people are like, I ain't going to buy something at 7.25%, 8.25%. And then luckily we're back down to where we're the lowest rates we've been in the last 4 years.
And what are we at as of today of March 5th?
Well, you want me to add in the Iran part to that too? Because what people understand is everything's the oil right now has been going up because of the Strait of Hormuz. They're threatening they're going to blow any ship out of there that has oil in it. So that's 20% of the oil going through the system. So that is what caused oil to go up. And normally what typically happens when we have stuff like this, when 9/11 happened, rates dropped drastically. I know it was a horrible time, but the first thought in my head, because I was owner of a company going, man, we're going to have a refinance boom. And we did, because rates dropped. And that's what normally the safety is, what people put their money into bonds for safety. The problem right now is people are not doing that. They're putting it into gold.
Yeah. What is with that? Gold and silver too, I heard.
Because you can touch it.
Oh, it's because it's
a tangible. You can feel it, touch it, everything, and you can see it, and you can hold it. You can go dig a hole, put it in the ground, and know exactly where it's at all times.
Yeah, now that you say that, I've heard that before.
Yeah, but normally it was the problem with gold and stuff like that was you have to buy it through a company that does that. It's not like going and buying raw gold. It's already been produced so that you know exactly what it's worth and everything else. So in the past, people didn't want to do that. Well, now, because it's over $5,000 an ounce, they're going to do that. And I remember as a kid, an investor always said, don't buy gold because it's always the price of a really good suit. And it was forever. Right now, it still is, unless you go to the Philippines or Singapore to get your suit. Then it's only a couple $100. But that's beside the point.
Yeah.
Right.
So you started your own mortgage company, and I mean, obviously, we've talked about how it fluctuates. How do you kind of pivot? How do you stay, in business, basically? When it gets hard, what separates you from others that don't make it?
And I'm just going to feed right onto that, because I've heard so many times it's hard to hear a guy that's been in this business for 30 years and gone through the ups and downs. So you obviously have figured out how to manage that, because I know too many people, a couple of people from the bar that, where they got into the mortgage business and then they had to get out because
the minute it shifts or it gets bad, they've got to bail. But what do you look for, or how do you manage that?
What changed in 2018, somebody came to me and said, hey, would you like to do a radio show? First thing I asked them was, do people still listen to radio back in 2018? No. And come to find out, talk radio, AM radio is huge. It's the last free press. It is so big. So if you can get on AM radio as a radio show host for real estate finance, you'll do very well. I get 50% of my business from my radio show. And so I started that show. It's called Real Estate Jerky. We give you something to chew on. From, like I said, and people will, what's the name of the radio show? I say it one time, everybody remembers because of that. And what that was a blog in 2010 when everybody told you, do a blog, start a blog. So I came up with the Real Estate Jerky blog, and then I didn't do anything with it. And then the radio show came, and then now they were like, when they asked me what we should name the radio show, I said, I'm just going to throw this out there. If you don't like it, no big deal. And then they're like, oh my God, we can do Smokehouse Studio. And, blah. And so our opener is really amazing. And I started in 2018 with one co-host, went to another co-host, and went a lady who was my agency person for a while. And then now I have a co-host who's been in the real estate industry longer than I've been in the mortgage business. Oh, wow. His name's Mike Kelly. And we have we work off each other amazing. And so people know who we are all over this area. And it goes all the way to Stockton and up into the foothills. And then because radio gives you, so it's all about being the authority. Well, how do you become an authority? Well, if you're on radio, you must know what you're talking about. And
perception.
Right. And that's what it is. And I understand certain things. So I've been doing this long enough. Plus what I've done from the radio show, there's two things that I've gotten from the radio show. I got a documentary that was in about real estate and finance, which is unheard of for a mortgage guy to be in a documentary. But the Avengers out of LA got this documentary company who's done some amazing documentary. They want to know how people made money in the real estate industry. And I was at an event in San Diego, and I was introduced to them, and the lady was talking to me, and I told them what I did. She's like, you have a radio show? And I'm going, yeah, as a mortgage guy, blah, blah. I want you in my documentary. So the following week I had to fly back down for the documentary. And now I can say that I'm in the doc, and that helped me. Then I did my book, Financial Freedom, Building Personal Wealth Through Homeownership. It's the way I do qualifications for someone to get into a house. First thing I look at is, which is normal, but most real estate books is all about how to buy, not about qualifying to buy. And a friend of mine's dad's like, this is the first real estate book that talks about how to qualify for the transaction. And first thing I look at is credit, because if your credit's not there, we got to fix it. Then I look at your income. If your income's not there, we got to get you a better job. And then we look at down payment. Well, that's easier to get than what people understand for the down payment part. But the other two you got to have. And so I go through the whole process. And those three things is what helped me stay in the industry. Plus I do 14 shows a week now. So I do 5 shows a week from the radio show. That's a live Monday through Friday, 8:30 on Facebook, LinkedIn, and YouTube. That gets cut up, put all over the place. And then I also do a podcast called Helping the Brave, which is for us veterans. Once we take the uniform off, we talk about transitions and what they're going through. And then I found out like 50% of veterans own businesses. And so we talk about their business and that kind of stuff. And that's helped out a lot. The other thing, I also have another podcast called Inner Edison, which is your greatest accomplishments come from your greatest defeats. And that one's been going on as long as the other ones, for about 5 years. And then I think I have, what do I have? I have also one that's called Aces 53, which has to do with sales. I know you're looking at me going, that's how I do.
Yeah, you like to talk, don't you?
Yeah.
What?
This is amazing.
Well, no, what it is the more, because people are like, I always see I'd go live. It always goes live, and that's what it is. You're always in front of people who are connected on social media, and it doesn't matter if they watch the show or not.
Yeah.
It's the fact that they constantly see me popping up on their phone because I'm going live or whatever. But my other podcast, Aces 53, is with a friend of mine called Brian Galkey, and he's a face recognition guy. Like when I first heard who he was a few years ago, I was like, I don't want to need to know about this, but he talks to you about like eyebrows. If you have round eyebrows, you think about the people around you first. So for real estate people or whoever going to connect with people, it's amazing stuff that this guy does. So we do a podcast that's about connecting and how to be the authority in the industry. And we do that on Tuesdays and Thursdays at 10 a.m. So after we're done here, I'm jumping right over on that one. And those things have helped me out drastically because I'm all over. Then I have a team of VAs, virtual assistants, not veterans.
Yep, we got a team too.
I have a pod who handles a bunch of stuff, and then I have a person who oversees my pod, and then I have another person who oversees all those people, and those help me out a lot. But I'm at the point where I'm doing so many things right now that I'm trying to make it to where I need. So someone told me there's going to be $1 billion company because of AI of one person. And I said, challenge accepted.
Hold my beer.
Yeah. Because I created 2 websites I told you about originally. Websites, who cares? Well, with AI, you can put stuff in them that is just amazing, that it's more than that. It's a tool. And one of the websites, you said I'm with Lending for Living, which is a company I've had for a while now. Well, I turned that. So how do you know who your perfect, everybody says avatar. I hate that. It's who your perfect client is. Well, mine are veterans. Then it's reverse mortgages, because all has to do about dignity, giving dignity back, or showing them dignity.
Yeah.
And then my third one is business owners, because most of the veterans are business owners. So they usually have a different take on how things are. Plus, I'm a business owner. I understand about off-year corporations and all that. And I had a guy come to me who was with B of A, and I don't mind saying this, for 60 days, and they couldn't approve his loan. I had him closed in 9 days. And the reason is because I understood how he took income. They had no idea because they weren't a business owner. Mm-hmm. So if you're not going to somebody who understands certain things, you're going to the wrong person. So what I was trying to explain, so my Lending for Living, I thought had this idea, separate all my businesses into 3 different websites. Lending for Living is all about reverse mortgages only. So when you go there, it's all about reverse mortgages. My loan squad's all about veterans and VA loans and everything that has to do with VA loans that you always want to know about, but nobody can answer, or they have to go search. It's all there for you. You don't have to think. And then my third one, which I'm finishing up, is just for business owners, to whether it's bank statement loans or, the DSCR, all those different things.
This is amazing. So to touch on the VA one, like we talked about a little bit before we started recording for the 3rd time. That's an important one for us. And we just recently mentioned our daughter's in the Army National Guard. And luckily we had a resource, someone who was National Guard, former military, got into real estate, and he's kind of the local VA loan expert. And she and her husband bought a house at 19, but money that she'd saved from the military. They had the down payment. They got into their house looking to move. And if it hadn't have been for him, they're like, well, we have to sell this house to get into the next one. We need the down payment. He's like, why are you selling that great area? Keep it as a rental. She's like, we're 22 years old. We can't afford that. He goes, well, yeah, you can. And explain to us how the VA loan really works, like what it really looks like and the benefits of it. And I don't think people don't know that. I mean, they don't explain that to them. I mean, everybody has heard of the VA loan, but so why don't, if you could maybe touch on that a little bit, because I know that's a great resource for people that just don't understand.
Well, so the VA loan in the past was the worst loan out there because it never kept up with the value of homes. And so nobody ever used it because of the fact, like in California, whatever the conforming loan limit, well, the VA wasn't the same. And then they changed it a few years ago. It used to be by county. And then you'd have a county line where the people across the street, they were up to the 600,000, but the people on the other side of the street were only 350 or 400. And they finally changed it with the Blue Water Act, which had to do with Vietnam veterans and stuff, to where it can go up to like 2.5 million for no money down now. But the difference is there's regular and then jumbo. So the regular is whatever the conforming loan limit in the area, or the high conforming loan limit in the area. So, 1.2 or whatever. And then above that, you have to do different factors. But the most important thing is what people understand is your down payment is because you signed on the line and you said, I would go to war for this country. Whether or not you did or not, that has nothing to do with it. That's why there's no down payment needed. But a lot of older real estate agents, and I run into this all the time, remember the old VA loan that is so difficult, so this and that. It's not that difficult. I have one right now where it's on 5 acres. It's got a house. It's got an accessory unit. I know for a fact there is active pests that are going to spray me done. The VA appraiser went in there and said, no problem. There were outbuildings and everything else that everybody thought was going to be a problem. But you can also, this in southern states and in California, there is a short form VA pest report that just says there's no active pests. And so all the people we know, and then I tell everybody, I don't care if there's a clear pest report at all. I just want the short form. And the reason I want the short form is I don't have to wait for you guys. I don't have to wait for the copy of the report. I don't have to wait for the clearance of the report. I just get this active, it's a NPT 430. I'll forget the number if you need it. I can tell you, but Google it. It's a short form VA pest report. It's the best thing to do on every transaction, period. That's all I do on any VA loan. I want that. No matter how clean the house could be, I don't care. I can get the docs and close without waiting for you to do everything you have to do on it.
So Ed, on that note, how do you, as an agent or talking to,
I only work on loans. I don't do real estate at all.
Oh, you don't work on, well, you're right, but you're doing loans for somebody. I guess here, let me see if I can figure out the question.
I just was trying to clarify because I can do real estate. I have my broker's license in California because years ago when we had mortgages, we had to have a DRE broker license to own a mortgage company. They've changed it now, but I'm under the DRE because I like it better and have more control.
Well, I guess what I'm saying is when somebody comes to buy one of our properties and are using a VA loan, and I'm up against a conventional loan, I'll be honest with you. Sometimes we don't want to, as agents, we don't want to go to that VA loan because we know it's going to be more of a pain in the butt to get through. At least perspective or
like you said, it's
that is the problem right there.
Yep.
I can do a VA loan in 8 days purchase.
Right.
That's because it is not that difficult. The problem is the people doing it is the problem. Anybody who thinks they need to write a contract for 30 to 45 days because it's a VA loan has no idea how to do a VA loan.
But how do we get that to the general public, or not general public, other agents, I guess you could say, because I've been guilty of it. No, I've also been guilty of, let's give this to the veteran and let's try super hard. It all depends on if it's one of my properties or one of my clients' properties, right?
Right.
So that's I guess the biggest thing. It's just
how do we change that perception? What's the message we can give to people?
I'm going to get that. But before I do that, so the short form is the MPMA-33. That's the form you want to use for the short form. So if you have, they need a pest. Well, no, we don't. We really don't need a pest report. Everybody wants to know what pest is, but we don't need it repaired. We just have that form. The pest company has to be willing to do that form. That's all the VA wants. You get that. There goes the pest issue. What people don't understand, veterans have money. They just don't have to use it. So I tell people, tell the other side, the reason you're going to see no down payment is because they sign on the line, but they have money in case they got to make up the difference in the sales price, or if they got to do repairs. They have the money. They're just not using it for the down payment. Everybody assumes because they're not putting any money in the transaction, they have no money at all. And don't be wrong, 20-30% of them don't have any money. That's why they're asking for closing costs. However, that's beside the point. But it doesn't mean all of them are that way. And that's the biggest misnomer out there is the VA loan is the best loan there is. It's guaranteed. All I wait on is the appraisal and I can close. And if I can do an VA loan in 8 days, what do you think I can do with a conventional or the easy ones? Those are the easy stuff. And the VA is not difficult. It's just getting that thought out of people's head that it's a difficult loan. Well, a conventional 20% down, I have more room. Not necessarily. They're the first ones going to walk. The fact that a veteran, when they sign that contract to be in the contract, they're going to do everything in their power to perform on this transaction. You can't say that about the general public. And so, because you look at the foreclosure rate on VA loans, it's the lowest of any loan out there. Because again, when we sign on the line to do something, we're going to do it. I don't know if that answered that question, but it's really change. And you need to have
it does.
It helps, yeah, because it just again getting that message out and changing that perception. I mean, like I said, when our daughter, she was able to use the VA loan to buy their second house, and it was easy. Like we went into it thinking this is going to be complicated. You know, it's like FHA, they peeling paint and all the different things. They came in, they made sure everything, did the appraisal, and they're like, yeah, you're good.
So here's something I've run into before.
Let me go to the peeling paint first. Yeah, the peeling paint's a problem for any house 78 or older, period. Period. It doesn't matter, conventional, whatever. If there's peeling paint, that could be a problem for anything. And that's usually where it's on the older homes. And so when someone says, well, we got to worry about peeling paint, that's for everybody. Conventional is going to say the same thing. Hey, this is a safety hazard. We have to have this looked at, tested, all that stuff.
Yeah.
Go ahead. I'm sorry, James.
Yeah, no. So one of the other things that happens to us as agents is when they do that, the appraisal, right? They come in, and then I've had some of them where they don't see a thing, and I'm like waiting for them to call shit out, because sometimes you rather have them call it out, fix it, than just start working on something, and then you didn't have to do anything in the first place. My point being is that's where we struggle too, is because I've had out where they come out and they do an inspection, and then they send somebody brand new who picks out something different, and it ends up being an appraisal thing, you know, and again, I don't have that problem as much at all on the conventional. I'm just telling you that these are problems that we run across, that your typical seller and agents, because it's the agent's job, right, to coach that person along, like, hey, don't worry about this, or hey, you can do this, or don't do that. But that's one of the things that we struggle with. And again, I wish there was something else bigger out there that we could tell people, like, hey, this is a veteran. Like you said, they signed the dotted line to fight for this country. Can we give them first dibs on this house? And not because it's, we're not giving it away. We're trying to give them the same chance. It's all the other obstacles you have to go through to get there.
Yeah. Well, and I get that. I just right now who they took a conventional offer first. And I told my people, and the agent told them to, let's put us in backup position, actual signed backup position. Because I know 50% of the time on certain properties in certain areas, there's a potential it's going to fall out. Well, guess what? They got it 2 days later because the conventional people are nitpicking the place.
Right.
That's the other issue. What would you want, a solid buyer, or do you want somebody who has nothing into this game and doesn't care? And that's the difference. And I know it's hard to get across, but it's important to have loan people in your area. And back to the appraisal thing. Most VA appraisers have been doing it forever because they don't hire many other appraisers until somebody leaves.
Right.
There's only so many to get on the VA appraisal board takes forever. And so because I have friends of mine who are on it, and they're like, yeah, it took me 8 years to get on it. And so it just depends on how many people have been, because most people who do VA appraisals don't want to not do VA appraisals because it's $750 that they don't split with anybody. Versus the other appraisals done conventional and everything else, where they go through a management company or they're a panel appraiser, they get a part of that fee taken off of it. They don't get the full price. And conventional though, lately I've been getting waivers. So appraisers aren't even coming out right now.
Oh, wow.
You still getting waivers because is it for COVID or what is
that?
No,
because Fannie and Freddie have so many appraisals in the books. They know exactly how much a property is worth or if it's close to what it's supposed to be worth. And you're getting I'm getting them pretty much on every refinance I'm doing and purchases.
Okay.
So I know we're getting kind of close on time here a little bit and you've got another thing to get to, but
we got 20 minutes.
Kind of, yeah. Last question here. I know our daughter's got a friend right now going, oh, I can't buy a house. I can't afford whatever. And gainfully employed, whatever, but really no issues. And we keep trying to tell her it's okay. But what would you tell someone who thinks that their home ownership is, nope, I'm not ready, or I don't have this, I don't have that. What kind of advice would you give to someone, or how could we even help people who think that they're, it's out of reach right now for them?
That same myth of I can't do it, and they don't even know why they can't do it. They just know that they're young and they can't.
I'm young, I can't buy a house. Well, why not? Why can't you buy a house?
Yeah. So those are the perfect ones, because those are always the ones who can buy a house.
Yeah.
It's the people who think they can buy a house that can't buy the house, or why. And so it's how that works. It is how that works. I can't buy it. You make 120 grand a year and you have no debt and no kids. How can you not buy the house? And you got 50,000 in savings, but I can't buy a house. It's usually first thing I would say, and I'm not trying to promote my book, get my book. I've had many people read my book and go, wow, I can really afford it. My co-host,
to promote your book. Go ahead.
Go for it.
My co-host, he sent it to his son, and his son's like, wow, I think I can really buy now. I should be purchasing a home. And because I have it set up to where you understand how easy, I try to make it easy. And I want people to go, wow, that was so easy. I go, yeah, I want you to do it again. That's why I make it so easy, is I want you to, instead of, it's like childbirth. The first time is, oh, I'm never going to have another kid. And then eventually you forget about it and have another kid. Well, I don't want that. I want you to enjoy the whole process through. And that's why I wrote the book that I did, because that's how I do with it. And I can't do everybody's transaction, but so I'm like, okay, here, read the book, go through where you can go through. I only do loans in California. I used to be approved in all the states, but when I looked at my numbers, I pretty much did 90% of my business still in California. And so that's why I focus on California.
Sure.
Plus about almost 23% of all loans are done in California. That's enough for me. So.
Yeah. Right. Well, and along those lines,
so if you want my book, just go to my website's Ed Parcaut, my name, at edparcaut.com. Click the book, you can buy it, or you can email, just reach out to me through the show, say you heard me on the Home Guys, and I'll send it to you for free. If you guys have people who want it, just send me their address. I'll mail it to them for free.
Oh, that's awesome. Yeah. Well, and I was just going to say, how can people get in touch with you? But there you go. And then throughout the show, we'll have Brady, our content guru, upstairs. He'll drop all the links to all of your different podcasts and information. And he'll put our information on here too. And
my website has all my podcasts, all the radio shows and everything. So you just have to go to one place.
Awesome.
And then, again, lending. The one thing about my whole Lending for Living and Loan Squad was even if I can't help you, I want you to be able to get the information so that you'll go get the stuff. I was going to write another book just for VA loans. I'm like, but why? I can just have it all in one place now, and you don't need to read a book.
Yeah. Yeah.
So I was going to ask you, for us that don't like to read, we like to listen. You're not on audio, are you?
Yes. For which? For the book? No, the book I have not done audio. You can listen to. So you can just listen to all my stuff. I pretty much go over the same stuff over and over.
There you go.
And my YouTube channel has tons of separate little things for how to reverse mortgage, different little things, and or just call me. How about that? That's it. I'm old school. Just pick up the phone and call me.
Those little boxes, you can actually use them.
Well, that's so funny that if anybody ever needed a mortgage guy, I mean, that's California is where it's at, right? I mean, you're going to probably know more from California. So we're in Minnesota, right? And so we figure California, Minnesota, and New York, everything. You guys start these new laws. They skip all those other states and come right to Minnesota. Then they skip all those other states and go right to New York.
Are we talking about mortgage, or are we talking about stupidity?
Both.
Two separate things.
No, it's pretty much the stupidity part. Yes, you're right. So a lot of times you guys all know about what's happening.
So the problem with California is, love him or hate him, is Arnold Schwarzenegger, when he was in and he was getting ready to go out, he pushed a thing on the ballot it was supposed to be for only the top 2 parties need to be on the ballot. Well, it slipped and they put the top 2 people, and that's how we became a one-party state, to where it's only Democrats run in most of these areas, because it's only 2 Democrats on there, not 2 different parties. That's how that
happened.
Yes. So he was a Republican who tried to keep Republican in power but messed up. And of course, no Democrat's dumb enough to go ahead and say, no, let's make it fair now. No, it's not.
No one's going to do that.
Yeah. And that's the problem. Yeah.
Ed, this has been educational and entertaining, and it's been great chatting with you. And we'll let you know when this is live, and people can reach out. And thanks for helping us grow this. This is something that we're jumping into big, hardcore. Just so you know, we're franchising our model, and so we already we're in 3 other states already: Texas, Florida, and Tennessee. And now those all happen organically, just from being on a couple of podcasts and different things. And now we're really pushing it. So that's Jen and I are pushing that. We have our normal business that's here that runs itself. Somebody else runs it, and this is our next adventure. So thanks for being part of that. And best of luck on anything else that you do.
I appreciate it. Thanks for having me on the show today.
Awesome. Thanks, Ed.
Thanks, Ed.